Now, as we wrap up the show for today and obviously for the week, and my guest is Mr. Tajuddin Olayinka, who joins me for this conversation. Mr. Olayinka, good afternoon to you, sir. How are you today?
I'm good, Tolu. Good afternoon.
Yes, the market is staying in green. Can you take us through the workings and happenings around the market for the entire week?
Okay, the week has been very good for the market. This week that is ending today has been very good for the market. Today, market just closed slightly up. We saw bargain hunting and profit taking, across board. Some stocks gained, some higher, recorded losses. But on the balance, it was still a fairly, it was a good showing for the market. Let me just put it that way. It was still a good showing if you consider what is happening in other markets, especially with the ongoing U.S., Iran, Israel war and all these disruptions here and there. So you find that the market is still likely positive and in fact showing some kind of resilience, because most other markets, especially the advanced markets, are actually not getting to right at this time. Most of them are negative. And so for Nigerian market to be showing some kind of resilience shows that at least the market is there. I mean, the market and the economy is able to absorb the kind of shock that is coming at this moment.
So moving forward, any form of worry, because some say, like I spoke to my guest earlier, that the portfolio guys might get worried and start to move their fundings. But with the fact that we have a series of local players standing tall in our market, do you think we won't feel any impact on trading?
It won't be so much. The only impact would be on the forest reserve. It could affect our reserve, and if it affects reserve, of course, it will shape the exchanges a little. But the positive side of it is that we are also having more accretion to reserve through export process, especially through crude oil sales. So if you are able to improve if you are able to benefit, I believe we should benefit. The crude oil prices that are up at this moment to give us, a balance between exit of some portfolio investors and then the inflow from oil export proceeds to balance it out. So I don't think there'll be much of a problem at this time, and I don't think many of them will also want to leave, because once the economy is safe, once the country is not actually affected by the bombing, so definitely we won't have so much of them leaving the market.
All right.
But all the same, we still have a local players absorbing that shock. Being able to take position and of course being able to take them out.
Investment banker and stockbroker Mr. Olayinka, Tajuddin Olayinka, thank you so much. Have a great weekend.
Thank you, it's my pleasure.
All right, finally, let's tell you that German carrier Lufthansa has reported stronger than expected results for the 2025 financial year, supported by tighter financial discipline and fleet modernization. The airline says improved cost management alongside slightly lower fuel prices helped boost profitability as passenger demand across Europe remained resilient. In a statement, Group Chief Executive Kirsten Sapper says the company significantly increased its operating profit last year while recording its highest revenue on record, highlighting the group's resilience and operational stability. Lufthansa posted an adjusted operating profit of 2 billion euros, about $2.3 billion, exceeding 1.9 billion euros forecast by analysts in the company compiled poll. However, the airline says its outlook for 2026 remains uncertain due to geopolitical risk, though it expects overall capacity to grow by around 4% along gains in revenue and operating margins.